Good morning, it's March 30th, 2010, and this is your morning report. Heavy UK financial calendar today, volatility expected in sterling pairs. Monday's trading saw the USD weaken against all majors as the EU IMF rescue package has stabilized the markets and will most likely enter a consolidation period. The markets, in terms of risk, will be looking at the next Greek bond issue and how the markets receive the offer. On the financial calendar side, we saw U.S. personal income remain unchanged for the month. However, a big surprise was reported with regards to consumer spending, as the figures showed a 3.1% increase as opposed to a 2% expectation. Equity markets closed positive 0.57% for the S&P 500. West Texas Intermediary Oil gained over $2 to 82.17, and the two-year U.S. Treasuries traded between 1.11% and 1.03%. USD yen, as expected, tracked the yields lower as well to 92.13 from the 92.90 highs. In Europe yesterday, we saw an improvement in both business and economic sentiment for the month of February. Greece also went ahead with a 7-year bond issue which funded all of Greece's debt needs. However, the yields did remain elevated. Focus turns to Wednesday's Eurozone CPI report as attention shifts to growth and inflation expectations within Europe as a whole and has slightly moved away from the focus on a possible Greek default. Euro USD yesterday traded between 134.19 and 135. In the UK, we saw plenty of short covering in the sterling dollar pair as traders covered their short trades tracking the euro. Currently, the major focus in sterling trade is the outcome of the UK parliamentary elections. There is great risk of a hung parliament in the country, meaning that a minority government will find it hard to pass tough austerity measures so as to bring the UK budget deficit back under control. Consumer credit saw an increase to sterling 0.528 billion, and there was also an increase of 0.3% in the M4 money supply. Sterling dollar traded between 148.90 and 150.18. Today, the market will shift its attention to the UK nationwide house prices, looking for a 0.2% increase for the month. We also have the UK Q4 GDP report expected at 0.3% quarterly, and the UK consumer confidence for March expected at -13. There are plenty of major indicators today for the pound expected to elevate volatility in sterling pairs. In the US, we will have the consumer confidence and the Case-Shiller 20 monthly, also expected to cause some volatility in the USD. Currencies to watch out for today, we have the Euro USD and the sterling and the USD yen, Euro USD pivot point is in at 133.65 with a preference to enter into long positions at 133.75. And the USD yen pivot point is in at 92.25 with a preference to enter into long positions at 92.30. Today's calendar and market movers. UK nationwide house prices for March expected to grow by 0.2%. UK Q4 GDP quarterly expected to remain unchanged at 0.3%. US Case-Shiller 20 for January expected to improve to 50. And the US consumer confidence for March expected to improve to 2. Equity markets. We have the US equities closing positive on Monday with the Dow and the SP 500 closing 0.42% and 0.57% respectively. The European bourses were positive on Monday with the FTSE up 0.13% and the DAX and the CAC closing positive at 0.60% and 0.29% respectively. The Nikkei and the Hang Seng at the time of writing is at 1.01% and 0.60% respectively. This has been your morning report. I'm Sarah Henry from the easy-forex dealing room. Have a good day.
Not only have you found a great place for Forex news, you found a great place to trade it. Registration is easy. Just click Join Now. Membership has its unique benefits, such as the freeze rate, the trade simulator, the inside viewer, and personal dealers. Your personal account manager is waiting for you now.